Hey guys, Hola Pablo here. Want to do a quick Bitcoin analysis video while we're in a very crucial uh, place right now in this trading range, I believe. I wanted to go ahead and take an opportunity to just do like a biopsy and let you all know what I see. If you recall, a couple days ago I released a video, a little tutorial on trend confluence volume, and that's kind of what we can employ in this situation. Um, and I just wanted to show you kind of how I do it and how I analyze these structures. Um, so I have it on the 50, if you notice, I have it on the 15 minute, which the 15 to 30 minute is what I would call the forensic volume time structure. You know, these lower time frames is really what you want to do once the geometric pattern has been identified, like we have right here. I'm drawing. So basically, this is a trading range. Just came out of a distribution, obviously. And the first thing I like to do is just outline the pennant or the flag structure on the macro. So this would be the macro trend lines. And then from there, we can establish the trading range, which the trading range would be horizontal. And we can find the floor here, and or that could be trading range midpoint. And then we have another line there, and then another line, say here, right there. Okay, and so we'll go ahead and designate this center line. Let's make that yellow, and that will be trading range midpoint. So TRM, so TRS, trading range support, trading range midpoint, which would be the 0.5 Fibonacci in this trading range, and the trading range resistance, the top line, the resistance, the ceiling, uh, so to say. So now next, what we want to do is go ahead and identify every time the price action, all the areas the price action has touched the macro resistance lines and the macro support lines. So just go into the structure and find all the areas where the price action is bumped into either resistance or support. And you can even look at it along the trading range as well. It's not just trend line, trading range as well. Don't be afraid to mark it up. Okay, and now we'll go ahead and we analyze every juncture where the price action is bumped into either the trading range or the trend support and resistance areas. And we go and we uh, focus on the volume at this point. And so we can blow this up a little bit now that we have our range lines and our trading and our trend lines drawn out. We can go ahead now here, this first area here. What do we have? I see immediately this demand spike right here that was unable to rally past micro resistance. So it immediately came back down. See, this is a lot of effort. This was a lot of buying, and it took it up to here and said no more. So there's obviously a bear block up above here, and brought it back down. We had another distribution. This is in a fractal time format, and the next area where it hit the macro support, it went from this is macro resistance down to macro support. We see a building of supply. We see supply growing overall. You see these predominant supply spikes building up, and that was on the pullback. That took place from the 13th of November till the current, well, it's not current, but it's through the 14th, so it's a day of volume predominance in supply on a pullback. So we have divergence. So this is going down, this is going up. In supply, when you're dealing with supply and sell-offs, divergence is a strength. It confirms the bias of whatever the price action is doing. So we have, again, so far up to the 14th, today is the 18th, we have bearish bias. Price action came back up, bounced off trading range resistance. This is TRR. Didn't quite make it to the macro trend line. Came back down. We had stopping volume here. Large stopping volume, predominantly for sure. Came back down again to macro trend support, and there it stopped. Again, we had a micro rally which brought it back up to trading range resistance, and there it hovered for a while. Came back down through TRM, which is the 0.5 Fibonacci. Remember, that's midline, which bounced off of trading range support, which is also macro trend support. And what happened here? We had large supply, man. Came in, supply that was building. So again, we have more what? Divergence, bear divergence. And since then, we've been hugging the macro trend resistance. It's come back up. Here it's bounced off again. It's bounced off trend resistance. We have a large predominant demand spike, but again, the demand spike, like as back here, it failed to produce a rally. And with trend confluence volume, we see that the candles have narrowed, the spread is narrowed as we reach the apex of this geometric structure, which happens to be a bear symmetrical triangle. And I say bear because it's come out of a bear trend, and so traditionally these things are continuation patterns. And so with the VSA, we see as we bounce on top of trading range midpoint, as we reach the confluence of this triangle, we're seeing again supply predominating. So what does all this mean? This means that overwhelmingly for this structure, for both the bear pennant on the macro pennant, and on the trading range, we have seen conclusive bearish bias in it. So, but it doesn't mean that when we reach the confluence of this triangle in the end and we break out, we're going to immediately break out to the north. I mean, to the south. That's not necessarily so, especially with Bitcoin. It's so manipulated. What we probably will see, which is quite possible, is let me go ahead and remove these drawings. What Bitcoin likes to do, what the market makers like to do, is they will fake out in the end. So instead of a dump, they'll pump. They'll pump it. We may go back up to the trading range resistance. We'll do a bounce, and then we may pump all the way back up to like this area here, which would clear out this liquidity void at about 17.8. So don't be surprised if we pump up to 17.8, mitigate this liquidity void. But then I think it's going to be a bear trap, and we're going to go back down. And we also may come up to here. We may not necessarily head all the way up to 17.5 or 17.8. We may stop out at 17.5 before the distribution. And then how far down can we distribute? Let's see what the Fibonacci retracements tell us. I'll just go from here. We'll do conservative from here and there. And so we're looking at maybe 15.1 to 14.3. So before we find support. So that's if we break through the 1, which would be 15.7 after whatever fake out to the north may happen. So anyway, that's what I say. Let me let you go. I hope this was helpful for you, and we'll talk to you guys soon. Take care and safe trading. Adios. Bye-bye.